Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today I actually want to talk about something a little bit different. Congratulations if you caught the big move on Nvidia last night into today, as well as all the moves that happened throughout the market on some of the sympathy plays. AMD, TSM, Tesla had a move. A lot of different moves took place today based upon Nvidia. Even AI had a nice upside move up to about the $31 mark with the move that took place based upon what happened with AMD. So a lot of opportunity was out there in the market. However, there's something I want to talk about that's a little bit different than what I normally discuss here on the channel, and it has to do with the idea for wealth creation through the stock market and what the stock market can offer you if you use a simple set of rules. And just going to go and quickly pull up a message that I actually pinned to my Twitter account yesterday based upon some things I was seeing online. And it just felt like it was time to go ahead and start to make a point of what I wanted to share. And basically, if you're not following me on Twitter, make sure you go ahead there and follow me. I post a lot of good high quality plays, as well as go over several different things that I see throughout the market, as well as some of our favorite stocks. So go ahead and follow me there. My link is in the description. All right, and the post that I actually pinned to my Twitter account basically says this: sharpen skills plus consistency equals the more money you make, leading to the more you can safely risk, leading to bigger gains, leading to the more that you can invest in long-term holdings, earning dividends, leveraging shares for income, which leads to a bigger cash pot equaling a critical mass. The game gets easier, just have to repeat. And I wanted to make sure I shared that and had it up online just so people understand how this thing goes. In the last few days, last few weeks or whatnot, I've been seeing a lot of posts about some gains that some people are making in the markets. Although it's all well and good that you can make high returns on stock gains and things like that, it's not as common as people may make it seem. Folks that have done this, they've been in the game for quite some time. They may have had other ways of actually attaining wealth and using it and leveraged it into the stock market, allowing them to move up. But there's a lot more to it than just that. So there are a lot of ins and outs about how this whole thing works. And I just want to go over that here with you today. Now, I know a lot of my followers don't necessarily make $10,000 per trade or $20,000 per trade. Again, although it's possible, the power of the stock market it's a very, very strong wealth building tool if used correctly and understood how to wield the weapon. But it's also a location where you can lose a lot of money if you don't have a consistent plan in place to pretty much get the best of the market and be on the winning side of trades, your investments, and your long-term holdings overall. So what does it look like? So I got a whiteboard here pulled up. Just going to go over a brief layout of how this actually works for the long haul. I'm going to call this a triumph triangle. All right, I'm going to start off with a triangle right over here. All right, and basically what that's about is, like I mentioned in my tweet, I'll have it posted here so you can take a look at it as well. But it starts off with the saying that I posted on my Twitter account a little while ago. It's about having your skills sharpened. And what are those skills? So I'm going to come over here and put a little SS for sharpening skills. Now, what are those skills? We're talking about entries, charts, how to read and understand a chart. Basically understanding what flows we're in, and what trend that we're in, and whether or not we can catch those trends. How to read what's happening with the options chain, and also how to read volume and price analysis and things like that. Basically sharpening your skill set in order to guarantee, or at least get as high of a probability of making positive trades, just so they can create more positive trades and consistent trades that bring you income in order to go to the next level of the triangle. So on this side, I'm going to go ahead and put consistency. And I'm going to leave a C here for consistency. And consistency means that you follow all of these key points in order to train yourself, in order to have the wherewithal to make sure that your trades are consistent, you're making money consistently, and you have a plan of attack and also a plan of protection in order to kind of protect the triumph triangle that you're building, in order for it to grow so you can start to move into more profitable territory, as well as consistent growth, cash on top of cash on top of cash. So what's basically involved in the C, we're talking about managing risk. A huge factor in consistency. Position sizing. Scaling in and out of trades. Profit taking. Profit taking is also important because you need to know when you need to get in and out of your trade and actually make your gains real. It's not just fake money, it's actually real money at the end of the day, and so on. So basically, you're sharpening your skills on one end. You got your consistency that shows that you can now make more money on a regular and consistent basis. If you're protecting yourself, you have your position sizing in place, you're scaling in and out of your trades, and you're also profit taking along the way in order to guarantee yourself that you're going to be making income from everything that you do in the markets. Which leads us to the next level, more money. Now, when you have more money, what do you do with more money? Well, a couple different things you need to do that are important to do in order to kind of make this thing continue to grow. Now, there are a couple different places in the stock market that you can actually put money in order for it to grow for you. Obviously, you know, you can buy a stock, have a stock go upwards, valuable companies, promising companies, cash flow positive companies, things of that nature. Also, you have index funds and things like that that you can hold the majority of your cash position or transfer your majority of your cash position into in order to make returns from the upside movement. So we have stocks, ETFs, bonds, etc. We don't really focus too much on bonds, so I'll leave it here just because for visual effect, but bonds is also an opportunity. We then move over into dividends. There are a lot of great stocks out there that actually can provide you with dividend income. You can make money off dividends, you can make money off of share lending, and you can actively make money on call writing. Call writing or covered calls. Now, covered calls basically is another strategy that we use in order to create income on long-term positions. If you can read the charts and you've already mastered your SS area where you sharpen your skills, you can read the charts, understand options, and understand how to take advantage of creating an income that can be used in order for you to get consistency and put more money into the bank so that you can create another form of money income, which you can use to either play more options or you can play towards going into your other stocks, such as your ETFs, the dividend income stocks, as well as your lending stocks, to make a consistent return on investment from your covered call or your active income side here. So you have an active income side on the front end. You also have an active income side on the back end. And this is what we try to make sure we focus on. So I do want to make it clear that these are opportunities all over the market that allow you to make money, not just one-sided. So now you build up a cash reserve. You're getting your cash flow from your stocks, your ETF. Your stocks are starting to go to the moon. Maybe you bought Nvidia at a crazy price at $100, and now it's all up around $400, $300 right now. You got your ETFs going in. You're picking up your dividend stocks like realty stocks or VU or whatever else. You pick up your dividends every couple of weeks, every couple of months. You're lending out your shares. You have active income coming in through covered calls where you're selling calls for 100 shares of the stocks you own, and you're actually building in wealth from just holding stocks and having stocks in place. Congratulations, you're looking really good. Now it comes to the fun part. You pretty much loop everything right back around and you grow the triangle another level. Sorry about my triangle, maybe not be the best looking triangle here. The triangle is now growing even bigger. Now, your Triumph Triangle continues to grow as you play this out. You're increasing your likelihood of success because you're constantly honing your skills. You're attending workshops, watching videos, going over the charts, understanding your TA, improving, implementing different tactics, understanding your options trades. But the beautiful thing that happens when you get to your options trades, and I'll tell you, is that now you can be a little less risky with your trades. After you start to build a nest egg, or you start to build a little bit of a bigger cash pot, or once you start to hit a critical mass in all of these areas here, your stocks, ETFs, your dividends, your lending, you're getting really good at the cover call opportunities, you can now either reinvest back into some of these, or you can reinvest into your options played in a safer direction as long as you are understanding and improving your technical analysis, your entries, and watching volume and all of those good things, to now be able to take further outdated calls closer to the money, possibly even in the money calls, based upon understanding what's happening with the charts. Because a lot of the time, these options that are less risky can 9 times out of 10 cost you a lot more. And I know a lot of folks that may be watching the channel or just getting started with options, some of the options that you might see can be pretty costly. And the out of the money strikes are usually a lot less expensive. The likelihood is a lot lower. So you're going into a riskier situation, which can cause you to lose money. But when you have money and when you have a nice pot to actually use to your advantage, you can now take less risky trades, which will improve the odds of you actually being successful. So as I mentioned in the beginning, the game gets easier as you make more money. So the goal is to actually make more money and put it in the right places. in order for it to grow for you so that you can make more money. It's money on top of money on top of money. You need to build the triumph triangle to your advantage in order to fully take place in this game and take advantage of this game in order to eventually start to show your $10,000 gains plus per trade. It is very possible, it is very doable, but you need a system in place. Now, the other part of this that I want to actually discuss is that you need a system of how to allocate your funds. And allocating your fund is one of the things that a lot of people forget about, is that you need to have a system of how you actually take your gains and move them over into the areas where you either want to leverage it for more income or passive income, or you want to leverage it for more active income. You want to make sure that you also pay yourself in order to lubricate the wheels and keep the wheel turning. 20%. You can do 10, you can do 15, but 20% is what I like to allocate towards long-term holdings. It's mine to keep. That goes into long-term holdings, which are dividend outlays. Several stocks, we'll go over those in a later video to let you know about what stocks I think are the best ones for dividends. But off the top, some good ones would be your Apple. Obviously a great company, everyone knows Apple. Whether the price is up or down, they pay great dividend. O Realty, O ticker symbol, and basically a great one for in the realty space. In commercial real estate. Starbucks, another one that pays a pretty good dividend. There are other great ETFs such as VU and SPY and so on and so forth that offer great dividends back for your purchases on stocks. You still use the chart, you still actually go ahead and plan out your trades and entries for the best price possible, but in the long haul, you're always going to make money with dividend stocks or ETFs. Share lending is another interesting one for shorted stocks and things that you can see downside on. You could potentially lend your stocks out in order to get a monthly recurring income position. Now, you still want to be in position to, again, enter your trades properly, enter your trades based upon all of these sharpening skills areas like we talked about earlier. You still want to make sure you get your entries in right and so on, but you still have an opportunity to create money and create regular income through your share lending program. Now, I'm not talking about using some of our favorite stocks. We're going to leave that nameless. However, there are several other stocks out there that are heavily shorted or maybe shorted or just this opportunity for shorting for lending that may be able to make you a consistent and good income just off lending your shares to other short sellers. Now, you can take a portion of this 20% and put it towards those type of stocks in order to create that position sizing in the meantime. It's like receiving rent for a house that you own. So keep that in mind as your 20% goes towards that on a regular and consistent basis. You build up that, you build up your triumph triangle. 10%, this is the money that you get to cut your pocket. You pocket this 10%, you can go buy whatever makes you happy. You need to take some money for yourself in order to make sure that the money is understood to be real. Because it's very easy a lot of the time in the stock market to forget that this is actual real income, or actually real money that you can use towards building things, buying things, doing whatever you like to do in life. So 10% is the number that I would say allocate towards those type of things. It's a healthy number in order to continue to grease the wheel, keep you going, keep you hungry, all while you're building your portfolio and building your wealth down the line. The remaining 70% is where I would look to play the safety side. You have your commodities, you have your longer term holds, again, all based upon good TA and good entries, your cash position, because again, you still need to keep a cash position in order to continue to play this triumph triangle. So you need a cash position, I would say, and what I normally will do is I'll keep about half of this amount in order to play the charts, the options game, and actually the active side of the triumph triangle, and then the other 35% I'll put into longer term holding stocks. You may want to play with this a little bit differently. You may feel comfortable doing something a little different that works for your style. I'm just giving you an example of how I do it, and half of this goes towards, again, cash positions in order for me to be able to play the charts and take opportunities as they come up. The other half goes towards the longer holding stocks that I'm not looking at right away. I put it in a portfolio, I let them sit there and potentially either do covered calls on them. I may even do share lending on them depending on which stocks they are and so on. But I like to play about half this position in cash so I can go back in and take opportunities that come up. And last but not least, a small portion of this, maybe 1 to 2%, I would suggest also using towards education. Maybe 1 to 2% of the last 70% we talked about. Education, books, just reinvesting in yourself to actually hone your skills so you can get back to increasing your knowledge base as well as your ability to create good trades and actually start making more money so that this triangle can grow faster, further, and take you places where you want to go. Great book recommendations, Volume Price Analysis. I always mention this. I mentioned it on my Twitter. Secrets of Reversal Trading, Fibonacci Secrets, as well as Wyckoff 2.0, some great books that I recommend taking a look at as well as get involved in a Discord, get involved in a community, something that's actually showing and supporting your trading career and supporting what you do as far as creating the effects of continued wealth. Like I mentioned in the beginning, a lot of people I know that watch this channel in the beginning stages of their investing career don't all make $10,000 per trade. It doesn't normally happen. We're usually starting off with smaller amounts, $100, $500, $1,000, and just getting started. But having a plan of action and having a plan in place ahead of time allows you to have a roadmap to know where you're going. And even if you're starting with a small amount, knowing where you're going will make all the difference down the line. I kid you not, and I promise you that if you follow these kinds of steps, you will get where you want to go in the markets and in your trading journey and career. So what happens? You got all this stuff all down packed. You've been reading your books. You're getting good at your charting. You're getting good at your TA, your options understandings and things like that. You're watching flow. You're managing your risk, your position sizing. You're scaling in. You're taking your profits regularly. You're buying long-term stocks, getting your dividends. All of that stuff's going well. You're playing covered calls, taking your premium, putting it back into other plays, and you're just making this huge cycle, creating this huge triumph triangle. And things are just going well. And your just triangle is getting bigger and bigger and bigger. So now you just turn into a whale, and now you're in a position where you can help out your family, help out your friends, have something left over for your kids down the line if you have children, and you can create a legacy just off of this. Now it goes a little bit further than this. Outside of the stock market, there are other avenues in order to take your trading profits, and vice versa, take other avenues and bring those into the markets in order to grow this. If it's done correctly with the right plan, it's a self-fulfilling prophecy. It's about having the wherewithal to understand what the plan is in advance and then take it from there. Down the line in further videos, we'll break it down step by step into what you need to do in order to start to create this type of plan for yourself. I'm happy to announce that I'm going to be putting a little bit of a Discord together in order to start to attack some of these things individually. We're going to be talking about charting, some TA, going over options trades. I'm going to have some different ideas for trade ideas. I have a journal as well as some opportunities out there that I'm seeing in the markets, and creating a community of like-minded individuals that really want to take this thing to the next level and start really making money overall, and actually putting that money towards a legacy building, not just immediate right now income. So link is down in the description. I hope to see you guys in the next video. Likes, comments, subscribe. We're going to be pretty much here every single day building our portfolios together and making the outcome income for 2023. So see you guys in the next video. Peace.